Today, Mark Cuban gives us a lot of great advice from Wallstreetbets as he did an AMA to discuss the different things going on with GameStop stock. Welcome back to the channel. Today, Mark Cuban, owner of the Dallas Mavericks and Shark Tank, came on a Reddit to answer some questions and gave advice to Wallstreetbets. He has a lot of good advice, so I wanted to break it down and spread the message for anyone who owns GameStop stock. Afterwards, he quickly went to talk to CNBC defending the Redditors. So we'll also break that clip down too a little later. Hello, welcome back to the channel. My name is Anthony from Money Trees, and today we'll be talking about the different articles and clips from Mark Cuban and discuss my own opinions afterwards. Yesterday afternoon, a moderator from Wallstreetbets posted that Mark Cuban will be doing an AMA on February 2nd. One of the first response he gave today was answering a very simple question on why is the stock plummeting so much. Many Redditors are very worried about the high volatility of AMC and GameStop and are ready to just realize their losses and move on. So he decided to give us some perspective. When Robinhood shut it down, they cut it back, and let's push aside why. They cut out the greatest source of demand. They created a Robinhood dive. No Robinhood buyers means sellers at lower prices to find buyers, and they kept lowering it until they found buyers. Keep the most natural buyers out of the market, and the price keeps on falling. He quickly blames Robinhood and all the other trading platforms who banned us from being able to trade, but what I found most interesting is what he said later on. If you can afford to hold on to the stock, you hold. If I don't own it, but that's what I would do. Why? Because when Robinhood and other online brokers open it back up to the buyers, then we will see what Wallstreetbets is really made of. That is when you get to make it all work. I have no doubt that there are funds and big players that have shorted the stock again thinking that they are better than Wallstreetbets. If you are an investor and truly believe in GameStop or the short squeeze, you should have no reason to sell. Ideally, the Redditors should have only put their money in if they're willing to lose it, so they should be able to hold to see this through. If you put your entire life savings in this, you're either very brave or very stupid, so best of luck to you. But like I said, if you have a little bit of your money you decide to throw into this, you've already given it up for this big gamble, so you might as well wait to see it through. What I will say though, that people who have invested their money and are willing to sell, as long as you aren't realizing more than $3,000 a year, you can actually write off $3,000 from your taxes when you realize short-term losses. So keep that in mind. If you're ready to sell out and don't want to deal with the volatility, you do have a fallback option. This will allow you to get your money back in the form of a tax refund so you can reinvest it to something less risky, like index funds. After the AMA on Reddit, Mark jumps onto CNBC to talk about Wall Street Bets and GameStop and discuss the legality and morality of Redditors and hedge funds. Market analysis and hedge funds are really upset about Reddit artificially driving the price up, but Mark argues that the hedge funds and analysts all do the same. Okay, right now I'll start playing the CNBC interview and I'll pause it in a second.
Back in the day when you owned a share of stock, you felt like you were an owner of the company. Now they have multiple classes of stock. You don't really own anything. You know, what you own is the right to sell it to somebody else. It is effectively a digital representation of a share of stock that gives you the right to sell it or to buy it from somebody else. And it's
so you're saying that changes in. All right. So you're saying that changes in ownership structure. I mean, you're not no longer a shareholder. You just hold a trading instrument. I mean, that's sort of a dark view of.
It's not a dark view at all. I mean, look, if you go back to my blog post from the early 2000s, I said the exact same thing, right? I haven't changed my position in all these years. And supply and demand matters. Why do you think that, brokerages have analysts that go out and make calls and go out on CNBC and come on and talk about the calls that they've made and the things that they see happening? They want to create demand. I mean, the reality is they shouldn't. If it was truly about ownership in the company, no analyst should go out there and say anything because you want the stock to stay as low as possible so you can own more, right? It's just.
I mean, whether you're a Reddit trader or an institutional trader, you crave research, Mark, and that's what the banks sell. That's what analysts sell. There's value in that.
No, I'm not saying there's not value in it, but I'm saying if I'm a client of your research firm and I pay you for that, great. But when you go on CNBC and talk up your book, you're saying, okay, I'm creating more demand to create an exit or just to inflate the price. When in reality, if you truly were an owner and you had additional capital, you'd want that price to be as low as possible because you want to own as much of the company as possible. That's what Warren Buffett. That's the Graham and Dodd approach. Keep that price down because it's undervalued, so I can buy more. But that's not what happens. We go out and we get long and we get loud because everybody wants that price to go up because that gives them an outlet to sell it. And I just don't see any difference between that and what Wallstreetbets is doing. Now, I understand you're
saying what redditors are doing is no different than the hedge funds and analysts who came onto the different media outlets to hype up and put down the stock. There are people who use the market as a trading instrument where all they want to do is drive up the price so they can sell it to someone else. While there are other people who want to fiercely own a company, will buy it as low as they can and will not try to pump up the price because they actually want to own a piece of a company. Many analysts have called for regulations for retail investors so they can no longer pump up the price of GameStop and AMC, but these analysts and fund managers fail to realize that they're using all the same tactic. I won't finish the video here, but I linked it below if you wanted to continue to finish it. Mark continues to argue about GME and what the future holds for it. In conclusion, for all the people holding AMC stock out there, follow Cuban's advice and hold on to your gambling money. Hopefully you are careful and only use your excess income so you can keep holding. If you made a gamble 2 weeks ago, you might as well be able to see it through. If you've already sold out or are thinking about doing it soon and you can't deal with the volatility anymore, make sure to look into writing off those losses on your tax return so you can reinvest that extra money in the future. Like I said, I want to make very clear none of this is financial advice. This is just all my opinion, and you should make your own financial decisions with a financial advisor. But thank you guys so much for watching the video. New videos are coming soon. I really appreciate any and all likes and comments. I'll make sure to respond to them as much as I can. Make sure to subscribe too if you liked the video, and I'll see you guys later this week.